JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 18th of May 2020. So yep, welcome everyone. Welcome to this Monday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, guys, a few seconds for you to read the rest and we can continue. Right, okay, so now then, before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research page right there. Now then, jumping into this chart, I would say, quickly. Of course, the total numbers continue to grow. The daily cases have have peaked on Friday, but yeah, it started declining here, and yep, we're seeing some good tendency. So basically, it kind of still remains the same. It's kind of moving sideways, and as I've mentioned in last week in my videos, if we apply technical analysis on this one, then we could see that this activity here is stuck in a range. So hopefully we exit the range through the lower side of this. So yep, we'll see how all this is going to play out, but we will continue monitoring the situation here, and it will be, to be honest, quite interesting to see if we will reach 5 million by the end of this week. So but with the same kind of progress, to be honest, it seems that we could. So yep, I hope you guys staying safe, careful, and yeah, let's see how all this is going to develop further. Now, jumping into the charts, the first one I want to touch on here is the German DAX. Now, I talked about this one last week, and basically I was telling you that we're keeping close on this level right here, the 10,280 zone, which as you can see on Thursday got broken, but the daily candle was not able to close above it, and then on Friday we had a push higher. But what I was saying, that in a way, in order for us to get comfortable with lower levels, we need to see a nice good daily close below that, below this territory, below this 10,280 zone, because that's the lowest point of 2018. We didn't get that, and if we look at the cash index right now and where it's trading at, you can see that it's trying to make its way higher. It's currently balancing at around 10,623 territory, so basically still below this downside line. But however, let's see if this downside line will kind of justify its status as being tentative, because again, for now it's a bit of a tentative line, so don't really focus too much on it, because ideally for us to examine higher levels, we would prefer to see a push above the 11,235 zone here, which is the highest point of April. And then, yep, a break of it would confirm a forthcoming higher high, and higher levels could be met. But if this downside line gets broken, then yes, this of course could increase the chances of a possible move further north. However, like I said, still we will remain a little bit on the cautious side right here, because like I said, still the more comfortable level for us could be after a break of the 11,235 zone. Jumping into FTSE 100, similar story here. The index failed to close below this territory. I talked about this one last week, in the beginning of last week as well. So the 5,702 zone, as you can see, we did get a break, but on Thursday, but we didn't get a close. On Friday, it traveled a little bit higher. but still remain below this downside line taken from the high of the 20th of February. Now, if we look at the cash index right now, we're seeing a bit of a push higher. It's currently bouncing at around 5,880 zone, so basically very close to this downside line. And so let's see if this line can get broken. The same story with the DAX. If this line gets broken, then yes, we will consider slightly higher levels, because as I said, this line is also a bit of a tentative one. So the more comfortable level for us after which we could examine higher levels would be from around here, somewhere from the highest point of April near the 6,151 zone. So keep your eyes on this one. But if we get a drop finally, or I wouldn't say finally, but if we do get a drop in a daily close below the 5,702 territory, then yes, we will aim for slightly lower areas. Gold. So gold popping higher, exploding to the upside on Friday, and on Friday it popped above the 1748 territory, which is the highest point of April, but failed to close above it and closed below it. So kind of what I was mentioning on Friday, that in a way is if we do get a nice daily close, then yes, we'll get a little bit more comfortable with higher levels. But basically we didn't get that. However, this morning it continued the acceleration, and yep, it now is sitting comfortably above this 1748 territory. Now, first of all, probably let me just quickly adjust this chart and the levels a little bit, because it's slightly a bit of a mess. Let's probably look at this one from the beginning, because again, there's too many levels here that I have. So first of all, of course, let's mark the April high, which is roughly around here near the 1748 territory, and as you can see, now we're comfortably pushing higher. So previously I talked about a range here where the index is kind of currently stuck in. Not this one probably, let me just, but now to be honest, looking at this picture, you can't really talk about any range. Now we'll probably, what we're going to do here is we're going to mark some key important levels here. So first of all, let's probably draw, because it's nice and now on a nice steep uptrend. So let's draw a nice trend line here. So it's a bit of a tentative, I do understand that, but yep, let's keep it on the chart for now. As long as this upside line remains intact, yes, there are still more chances for this one to drift further north. Now, the 1763 territory where it's currently trading at, let me just go back into history, because that's the low of October 1st, if I'm not mistaken. Let me just zoom in here a little bit. So the 1763 territory, that's the that's the low of October. Let me just quickly capture this one. Yes, that's the one that I'm talking about here. So that's the low of the October 1st, 2012. So if of course this barrier kind of provides a bit of support, resistance, then yes, we could maybe see that one kind of drifting back down. Let me just go back now into the current price action. Let's quickly drag this. There we go. So slowly, and we're getting there. There we go, finally. So like I said, this is where the price is currently balancing at, near that October 1st low of 2012. Let's see if that area, actually this area, continues to provide resistance, because if it does, then we may see a bit of a correction, maybe lower. And don't get me wrong, even if it drops below this the highest point of April here near the 1747 zone, don't get me wrong, we still for the 8 zone, don't get me wrong, there is still a chance for the bulls to step in and push this one higher, especially, like I said, if it continues to trade above this short-term tentative upside support line. Now, the next level that, as you saw me earlier marking, the next level for us, the next target for us, is around the 1795 territory. That's basically the highest point of 2012, so could be quite interesting. Of course, slightly above that we do have that psychological 1800 zone, but yep, keep your eyes on the 1795 zone, because that's the, like I said, the highest point of 2012. In terms of the downside, if we get a break of this upside line and we get a drop below this little high, the high of the 8th of May, which is around around the 1723 territory. And I've mentioned a lot about, I talked a lot about this 1723 zone because it kind of acted as a very nice area of resistance previously. So yep, and that's also, by the way, the high of 12th of November, sorry, 12th of December 2012. So yeah, 12. And if we do get a drop below this, then yep, we could consider some lower levels here, a move towards some of these levels here, maybe, well, actually maybe not one of these, but probably somewhere around here, because it looks quite better. So 1680 zone could be a nice target here, but if that gets a break, then yep, a deeper extension to the downside could be possible. However, for now, guys, we're leaning a little bit more to the upside. Keep your eyes on the 1763 territory, because if it continues to provide resistance, then we may get a bit of a retracement here. But if it pushes nicely comfortably above it, then, well, the next target is the 1795 zone. Silver is doing even better. I talked about this one on Friday, and I was telling you guys to keep a close eye on the 16.54 territory. This got violated, and we saw a nice daily close on Friday above this level, above the 16.54 territory. Now, the next level, what I was mentioning, was the 17.594. I mean, we can round it up maybe towards the 17.60 territory. So that's going to be our next target. It will be quite interesting to see if we can reach that. So this idea didn't really quite work out a little bit. So well, because initially I thought that if we get a resistance here, then we could see maybe a bit of a correction. However, as you can see, it comfortably closed the daily candle above this barrier. So that's why now what we're looking here for is maybe it won't travel straight away all towards the 17.60 territory. Maybe we'll decide to retrace back down. So, but if it stays above this 16.54 territory, then yep, we could see maybe another round of buying. In terms of the downside, for us to get a little bit more comfortable with lower levels, we would prefer to wait for a drop below the 15.84 zone here, and this way the price would be placed below the 200 EMA, the 100 EMA, and yep, below this this April high, if I'm not mistaken. Let me just, yep, that's the April highest point of April. So yep, and then maybe more sellers could see this is a good opportunity to step in. Brent oil, quick update in here. So this one continues to push higher, and for now it's working out nicely. So everything according to the idea which I kept mentioning last week. So we managed to break this little short-term downside resistance line, so we can get rid of that. And now it is pushing higher. It's pushing above the. It made a new high on Friday, a new high for May. And yep, for now we are leaning a little bit more to the upside. However, that's from the very, very short-term perspective, because as you can see from the picture, we are still below this downside line taken from the high of the 8th of January. So in a way, it could push higher. However, we will remain very careful here, because we want to see if this downside line actually stays as a strong area of resistance. So yeah, for now, like I said, from the very short-term perspective, we are leaning a little bit more to the upside. However, let's not forget that if this remains intact, then we could see another round of selling. Bitcoin. Oh, and by the way, with Brent oil, if I'm not mistaken, the expiry, I know that WTI oil is expiring tomorrow. The contract, the June contract, is expiring. So let me just quickly double check this, guys. Because if I'm not mistaken, it should be today as well. I mean, that's yeah. Okay, so yeah, I think it expired already. So okay, right now then, jumping into this, basically for now we'll go from the technical side. Keep your eyes on the, like I said, WTI oil as well, because like I said, the June contract is expiring tomorrow. So yep, keep your eyes on that one, and let's see if we can get some sort of volatility from all that. Bitcoin Bitcoin is pushing higher, and after it kind of rebounded from this area, from this upside support line taken from the low of the 16th of March, it started drifting back up here towards this the highest point of May, the current highest point, let's put it this way, the current highest point of May, near the 10,045 territory. So don't get me wrong, yes, it could travel higher. However, as I've mentioned previously to you guys, if we look at the broader picture here, we are still below this downside line taken from the highest point of December 2017. So in a way, all eyes are on this downside line. If we get a break of it and we see a monthly candle, although this is a weekly chart, but let me just jump into a monthly chart. If we do see a monthly candle closing above this, then well, I mean, we could see this one pushing further north maybe, but again, for now we will probably stay very, very careful, although yes, it is showing good signs of potential move higher. However, what we don't want to see here is, and let me just quickly put this, so if this barrier continues to hold together with the downside line, the one that I've mentioned, if it starts drifting down, what we don't want to see here is a possible range. So basically this could happen, of course, we've seen this happening on other instruments, but again, let's keep this idea for now in the back of our heads. But the main, of course, question here right now, can it actually overcome this? Can it, first of all, create a new high for May, and can it overcome that downside line, the one that I mentioned, which was taken from the highest point of December 2017? AUD NZD. So this one continues to rally, continues to move nicely to the upside, and this is working out nicely. So on Friday we had a nice close here. It went further north, came closer to the 1.0865 territory. This is our target for now. We're not going to drag this one way too much to the upside, again, because we are quite, let's say, maybe overbought on the shorter time frame, and that's why we will be very careful near this 1.0865 territory, because if it provides a resistance, then we may see a bit of a correction to the downside. Now, first of all, let's recycle this downside line, and not this one. There we go. One moment, just a second. I captured the wrong line. Let's recycle this line and create it, or change its role and use it as an upside support line. So basically, in a way, we can keep an eye on this one, although don't get me wrong, it's still a bit of a tentative one, maybe a little bit. So here we don't have many touches, and yeah, that's why we would prefer to see a break of this this upside line, and then maybe a drop below some of these levels. But again, we will consider this idea if we do get a reversal here, a sharp reversal back to the downside. However, don't get me wrong, still, as long as this upside line will remain intact, or let's say if the rate continues to balance above the 1.0757 territory, which is marked by the low of the 12th of November 2019, then yeah, we will still remain positive. We are still positive on this one, like I said, but we'll be very careful near this 1.0865 territory. Now then, quick update on this this exotic pair, US dollar against the Turkish lira. So it continues to trade below that psychological 7 territory, and in a way, for now, yes, we are leaning a little bit more to the downside, but yep, we'll for now, like I said, we'll keep it very careful here, because still, like I said, it is below the psychological 7 territory. Now, if our target for now is the 6.8250 zone. Now, I mentioned this one in my previous videos, and this is where we're gonna target for now. Of course, ideally, we would prefer to see this one drifting further south, because if we draw a Fibonacci, let me just quickly grab a Fibonacci here, Fibonacci retracement. So if we drag it from probably from, well, okay, this is a very, of course, subjective, and that's why maybe from somewhere around here, I would say, because again, there's let's start from here probably, and if we'll draw this, you can see that this level here, the 23.6% retracement on the Fibonacci, kind of coincides with this territory, this level that I kept talking about, the 6.8250. Then this level, the other level, is very close to the 38.2%. So yeah, that could be quite interesting to see. We would prefer to see a drop to all the way till here. But of course, don't forget that the economic situation in in Turkey. We keep on monitoring that one because we keep on monitoring the headlines, because it's not really great in there, I would say, right now. They are burning through their foreign currency reserves, and yep, let's see for how long will that last. But again, for now, guys, be very careful. Like I said here, yes, from the technical side, we are leaning a little bit more to the downside. We are leaning towards the 6.8250 territory, and then we'll take it from there. We'll see if it wants to break lower, then yep, further declines could be possible. US dollar against the Turkish, US dollar against the Russian ruble. Now, again, I've mentioned this one because I keep mentioning this one. Well, I kept mentioning this one for the whole week last week, and just because we are in a very, very technical pattern here, very beautiful. I mean, it's just working out perfectly. So what I kept saying last week, basically we are still kind of getting into squeeze, we're coiling up here, and in a way, the more it kind of goes towards the apex, the more kind of the breakout could be a stronger one. So of course, according to the TA rules, these patterns tend to break to the downside because this is a descending triangle. However, we need to see that confirmation break first, because for now we cannot really talk about anything here, neither the upside nor the downside, because we need to see a clear break through one of these sides of the triangle, and then we will take it from there. Just wanted to give you like a quick update on this one, because like I said, it is getting closer to the apex. US dollar against this Swiss franc. Now here the situation is a little bit difficult. It's still stuck in a wide range here, so we're not really doing anything. We're just continuing to observe this, and well, for now what we would like to see here is, if this pushes higher, we will get a little bit more comfortable if we get a push above the 0.9797 territory here, and then we'll examine higher levels. But in terms of the downside, if this pair drops below the 0.9681 zone, that's going to be this could increase the chances of a potential drift lower, however lower within the range. So in that case, we will target only the 0.9588 zone, which is the lower bound of the range. But if that gets broken, now this is where it could become even more exciting for even more sellers. GBPUSD, very quickly on this one. So finally it closed on Friday. I talked about a lot about this pair last week, and we managed to close outside of this range. We broke the lower side of the range here, and we dropped below the 1.2163 surge. Looking at this picture, we are still bearish. Even if we will see a bit of a push, let's say a correction to the upside, still if it stays below this 1.2163 territory, we'll continue targeting the downside. For now, we will aim for the 1.1934. Of course, don't get me wrong, we do have that psychological 120 territory around here. It's marked near the low of the 17th of March here, and yeah, we'll keep an eye on that psychological 120 zone. Of course, slightly below that, we do have that inside swing high of the 20th of March, which is around the 1.1934, and then we'll take it from there, guys. If this by any chance pushes higher here and climbs back above the 1.2350 territory, then well, this would place the rate above the 21-day EMA, and maybe could increase the chances of a potential drift higher. However, higher within the range, because still the more comfortable level for us is a push above the 1.2650 zone, so keep your eyes on that one. GBP Euro, also quick update here. So finally, also on Friday, we managed to get a nice close here. So I talked a lot about this pair as well last week. So we closed below this the lower end of the range, and in a way kind of drifted lower. It didn't reach on Friday, it didn't reach one of our targets here near the 1.1164, but it reached it today, from which it rebounded, and kind of right now you can see that maybe we could even see a bit of a correction here, a small correction to the upside. However, we'll remain still bearish, a little bit bearish, and our next target is around the 1.1110 zone, which is the inside swing high here of the 20th of March. So we'll keep an eye on this one, and again, like I said, that's going to be our target for now. We want to see if this area provides decent support. If it does, then we will take it from there. And finally, EURUSD. So here the situation still is the same as I've talked about last week. Basically, as long as it kind of stays in this little area between the 1.0875 on the upside and the 1.0777 on the downside, we will remain neutral because first of all, we are still in the range. That's the first thing. The second thing is that we're still kind of balancing above this short term, maybe a little bit tentative, but to be honest, I wouldn't say that it's a very tentative line now, because we had a few tests here from which from where the pair rebounded. So that's why we'll keep an eye on this upside line, but of course preferably we would like to see a drop below the 1.0777 territory, and then we could consider deeper extensions to the downside. So keep your eyes on this one. But again, like I said, in order to aim for slightly higher levels, we would need to see a nice good daily close above the 1.0875 territory here. That's the high. Well, that this way, maybe, as you can see, this level here, that's the high of the 8th of May, and we did get a few overshoots here, but neither of the daily candles managed to close above this. So in a way, this is one of the levels that we're going to be keeping an eye on, and if we do get a nice daily close above this, then in a way it could increase the chances of a possible move further north. So guys, I really appreciate your time, guys. I really thank you very much for watching and listening, and I really hope you found this useful. If you want to join me later on, my trader's tea time as always 13:15 GMT time, and yeah, we'll have a look at some of these instruments, some new ones, and we'll take it from there, guys. But I hope you have a fantastic week. It's a very relatively quiet day today from on the economic calendar. However, keep your eyes on the political events. So let's see how that is going to play out. And yeah, as I said, keep your eyes on oil as well. That could be quite interesting as well. So guys, okay, thank you very much for watching and listening. I really, like I said, appreciate your time, and stay safe, both market wise and health wise. Thank you very much, and bye bye.